All right, let's take a look at this market right now. We're still deep in the red, about 45 minutes to go in today's session. The Dow and the S&P still off more than 7%. Joining us now to discuss is Tom Lee. He's the managing partner and the head of research at Fundstrat Global Advisors. So, Tom, let's just start with your overall thoughts on, let's just keep it to today's market action. It certainly seemed over the weekend, and we saw it last night, it was going to be a crazy futures open, and it was. And then we got the circuit breaker today. Is this kind of making your head spin, or did you anticipate we'd see days like this?
No, I think it's hard to anticipate a day like this. I mean, the stock market's going to close down, let's say, 7%. And it's a historic decline, and probably top 3, 4 worst ever in the history of the market. So if you think about it, like in 10,000 days of trading, there's only been 3 days that are similar, right? So, I mean, this is real history. And if someone said, oh, well, it's because, Corona and oil, scared us, I mean, it's changed the level of the market by 7%. So, in other words, is the future value of the economy and stock market 7% worse? I don't have the answer to that, but to me, I don't think today was price discovery. I think this was interest rates fell, VIX spiked, oil tanked. People said, I got to just get out of everything and reassess. So I don't think today's a price setting day, and I wouldn't want to be trying to establish price in here by selling anything. Mm-hmm. And if someone is a bargain hunter, maybe they could try to put some crazy bids out there and get some stocks really cheap.
So to what you're saying, it also doesn't sound like this is definitely over. I mean, how do we, since there's so many questions that are still out there, when do you know, okay, we're not going to have this day again tomorrow or Wednesday? Do you have any sense of that?
Yeah. Well, I guess there's a couple ways to sort of try to triangulate. One is to say how much of a recession's priced in. And as of today, there's a 100% chance priced into the equity market. And when you look at the rates market, it's virtually 100%. And the VIX is pretty much saying it's 100%. So today, the stock market has priced in a recession in the U.S. And then from, tomorrow, do we price in a depression? Maybe. But I think the other thing you have to ask is, okay, well, then how do you calibrate visibility around it? And I think the key question that's going to come up over time is actually around Corona is going to be is going to be mortality. Because I don't think case count, like what we're seeing is we're seeing case count rise, but now with more data, we're seeing the mortality differ between countries, right? Like, so where there's really good data sets like Singapore and South Korea or even Diamond Princess, the mortality is really low, like less than 1%. But in some of the other countries where there's not great counting, the mortality looks like it's 11%. So I think as that starts to standardize and we get visibility, the market can reprice. And then with oil, 40% of the global economy is a commodity producer. So dropping the price of a major commodity by 30% is a huge ripple effect. And so I know there's a benefit to U.S. consumers, but really it's not great for the global economy.
Tom, so refresh our memory on what your target for the S&P is for this year. And you haven't revised that at all, right?
No.
So you're standing by the fact that you said the V-shaped recovery is going to happen.
Yes.
It's intact. So what makes you say that?
Yeah, so let's say we're at 2,700 on the S&P, and we think 3,400 is possible, which is a 700-point move. Which, by the way, is where we were like 2 weeks ago, right? Almost. I think that's definitely possible because the stock market is, we're trying to do some price setting here, and we're trying to reflect a lot of deep stress. But as long as the economy doesn't break, then what we have is a liquidity overwhelming the market short term. And that's kind of what happened in China, right? If you look at the Shanghai Composite, it's really roughly 3 weeks ahead of the U.S., but that market fell 14% over roughly 13 trading sessions, and it recovered almost all of it in the following 14 trading sessions. So it's two paths. I mean, we're either going down or we're bouncing.
Well, and so to that point about price setting days versus kind of washout days, and just the speed with which the market moves. I mean, we saw it on the upside at the beginning of 2019. It's not like that's ancient history that we saw the market go up 20% in just a handful of sessions. So, I mean, is this the kind of move that you're now I mean, no one's going to say it's normal to see a 7% move in the market, but should we be more accustomed to the market trying to price in every eventuality in a week and then try to price out all the worst stuff in that same amount of time? Because it does seem to me like a pattern that's repeated quite often in the last couple of years.
Yeah. Well, I mean, I think the game of investing's changed in the 25 years or 27 years I've been following markets, because technology has reduced trading cost and information flows a lot more efficiently. And so if someone's trying to outsmart the market because they've got better data points, that game's already been won by the systematic funds. And those systematic funds, are really reacting to the social media tweets and the trends in Twitter and the media, and they're scoring all that. And if they're detecting pessimism, then price momentum becomes really dominant in the short term. And I mean, one way you can even tell is look at trends in Twitter, and it's like Corona's like number 3 in stock market crash. Number 2, look at Google top searches today, and it's like, the Kardashians. I mean, so the broader market isn't really actually that rattled by the stock market or by Corona, but in the high frequency social media Twitter world, it's dominating, and so that's what the market's reacting to.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.